Hi everyone, let's go through all my scenarios from macro to the lower time frame, starting on the macro with the bearish scenario where I'm looking for a 1, 2, 3, 4, 5 and then a corrective WXY to the downside with targets lower than 12.6k. In this scenario, this wave 4 however is very short in time compared to the wave 2 in yellow over here, because usually a wave 4 takes more time than a wave 2, so this is a little bit odd. However, the corrective pattern does look very good. We have a 3 wave over here in W, which then is a zigzag followed by an expanded flat in X, and then we would expect a 3 wave move to the downside in Y. The potential trading setup has to do with this 382 as well, which is usually a minimum target for a wave X. You also have the support resistance area over here and a weekly order block. So then a potential short position in this scenario is to enter or ladder them in this area, stop loss safely above, trading it to the downside for a wave Y. If we then look at the bullish scenario, we have a 1, 2, 3 over here at the all-time high, 4, 5 with wave 4 being a WXYXZ scenario, which is a corrective, more channel-like structure. In this scenario, we have wave 4 ending over here right on top of the 0.5, which is pulled from the low of 2 to the high of 3. Also, the low of wave 4 was made exactly on the 0.618 fib time, taken from the low to the high of 3 as well. And we had a volume peak at the lows, which can signal a reversal, just like it did with wave 2 over here, the last red candle, high volume peak before the move up in a wave 3. And that can also be possible with this wave 4 with the high volume peak that you have over here. Now, the two potential trading setups, one is already playing out, I should say, because that was entering the potential long positions over here. Stop loss below the 0.5, as high time frame candles are not allowed to close below the 0.5 fib for a wave 4, trading it to the upside. But the more safer option is this potential trading setup over here, where one can wait for a retracement, then ladder the longs into that retracement and eventually stop loss below, trading it to the upside, where the most common target for wave 5 will be between 98k and 174k. If we then zoom in a little bit, we start with the bearish scenario where we have the WXY over here, a WXY, and then we have inside X and ABC expanding flat. Now the C wave of an expanding flat is a 5-wave structure, as you can see over here, wave 4 bouncing on the 0.5 and this then being the final leg up, which then is a wave 5. Currently, this wave 5 is ranging in the most common target area for wave 5, which is between the 1.236 and the 1.618, pulled from the high of 3 to the low of wave 4. Also, price is also ranging inside the most common target for a wave C, the white box over here, which is the two 1.618s, basically between 27.6k and 34k. Also, the wave X 0.382 is here, taken from the all-time high to the low of W. So the 29.6k target is quite interesting because the 0.382 as well as the 1.618 are both at that exact same level. Of course, we have the support resistance area over here as well. So yeah, it's kind of coming together. Wave 5 might be in, but in my preferred scenario on the medium time frame, we might still find a little bit higher before we eventually go to the downside, where the potential trading setup, as you can see, is laddering the potential shorts in this area over here. Stop loss safely above, trading it to the downside. The reason the stop loss is over here, basically on the edge of the rare wave C target with the most common wave C target, is because wave 3 is already extended and therefore you don't expect wave 5 to be extended as well. If wave 5 is going to reach this high right now, then I don't think this is a wave 5. This might be maybe a wave 1, for example, or a 1, 2 and then 3, but in this scenario we expect a little bit of a deeper retracement to the downside first. If we then look at the more bullish scenario, which actually has the exact same trading setup, we have a WXYXZ over here, followed then by this being a wave 1. The target, however, is exactly the same because the impulse is exactly the same. So over here, once again, we have the support resistance area, trading setup, laddering the shorts in this area, stop loss safely above, trading it to the downside. In this scenario, the most common targets for a wave 2 are between the 0.5 and the 0.786 fibs, taken from the low of this Z to then the high that we will make or already made, which is then the end of wave 5. Currently, it's sitting between 21.1k and 17.6k, with by far the most common target being the golden pocket, which also has nice confluence with the lows of these wave 4 over here for maybe a little bit of a liquidity grab before then price moving to the upside. We're basically towards the very bullish macro target, stop loss below wave Z, and the targets would be 100k, the moon basically. Then we go to the medium time frame very bullish scenario. In this scenario, which is looking less and less likely the more videos I make, we have wave 1 ending over here, wave 2 ending over here. First of all, wave 2 is very, very short in time, only 23% of the time it took to form wave 1, and usually wave 2 takes at least 38% of the time it took to form wave 1. So this wave 2 is very short in time. How deep it went is okay, but it's the time that is the main problem. Then we have over here a wave 1, 2, 1, 2, and we would expect a very big, massive, high volume, big candles to the moon, wave 3. But as you can see, and probably know by now, it's not looking too great. I mean, volume is still going down, even though price is kind of making higher highs over here. This wave 2 didn't hit the rare target of the 0.382 for a wave 2 because it actually just missed out on hitting it, which is not very nice. And then if we have another 1, 2 over here, we expect a 3, then this wave 2 also only hit the 382 fib. So you have this being very rare, the retracement of 2, the retracement of this 2 only to the rare target, and this 2 being very short in time. So yeah, kind of like 3 rare things in one scenario, making it very, very unlikely, and the volume is not really working in the favor of this scenario as well. So my preferred scenario at the moment is that this is a 1, 2, 3, 4 working on ending this wave 5. If we then zoom in, we have an extended first wave, followed then by 2, 3, 4. So if wave 1 is extended, the targets of a wave 2, 3, 4, and 5 will change, because the most common target for wave 2 will be between the 236 and the 382. Wave 3 does not have a target. Wave 4 most common target will then be the 236 and the 382. By the way, both very well respected as well. And the target for wave 5, if wave 1 is extended, is between the 0.618 and the 0.786, basically between 28.9k and 30.4k. Now, as you can see, we already hit this target area. However, as common with Elliott Waves, potential setups, longs or shorts, are taken by laddering into positions. So laddering the shorts over here from basically the 0.618 all the way to the 786, stop loss safely above, trading it then to the expected downside in this particular scenario for either a wave 2 where we go to the downside and then up once more in a big wave 3, or this is the high of wave X and we go to much, much lower prices for a wave Y. If we then go to the lower time frames, I have a couple of counts I'd like to show you. And actually the lower time frame starts to become quite complex with the range that we have. Of course, it's weekend, and in the weekend price tends to range, which can be quite annoying. But let's at least have a little look at what I have on my chart. So the first one again is then a 1, 2, 1, 2, 1, 2, right? So we already spoke about this scenario basically. Now a little bit more detail, WXY here in the wave 2. Length of this wave 2 is quite long, but it's fine. It's still before at least the 1.618 fib time taken from the low of 2 to the high of 1. But yeah, you can clearly see it bounced on the 382, which is a rare target. Also, the trading setup doesn't really make too much sense because the stop loss would be so long as the invalidation is below this wave 2. So yeah, of course, if the next target is 100k, it would be great, amazing, and this trade is the best out of all the trades ever shown. However, you know, with the volume that we're seeing at the moment, with wave 2 being short, this wave 2 rare target only hitting the rare target of the 382, this wave 2 only hitting the rare target, it just does not look that great. If you then look at this scenario, wave 5 is already in, with then the final leg being a 1, 2, 3, 4, 5 over here. So now wave 5 is in and we're basically looking for more downside. Now, this one is definitely plausible, right? This one is definitely possible. However, if we do go to the 1 hour, I have one problem here though, that if this is a 1, 2, 1, 2 setup, or basically I should say 1, 2, 1, 2. Well, the problem with this second 1, 2, so this is the second 1, 2, is that this wave 2 took the high of the origin of this wave 1, this high over here, which of course is not allowed with a wave 2. So that scenario is not possible. So then what if this is then a 1, 2, 3, 4, 5, some sort of a diagonal, you might think, right? Well, there's a little problem here as well, because if this is wave 1, and then this is wave, so 1, 2, 3, 4, 5, right, to the downside, and I'm going to show you the one-to-one target, then you will see that then you will see, sorry for actually doing this, usually I prepare, you will see that over here this third wave, and we got to zoom in slightly, but this third wave is actually longer than the first wave. So if this is a wave 1, 2, 3, 4, 5, wave 3 should be shorter than wave 1, and wave 5 should be shorter than wave 3. Else you're gonna get an expanding diagonal, which is a very rare pattern. So in this scenario, the only way you could make this valid is saying, hey, this is an expanding diagonal. But that's so rare that I just don't like this. So I think this is also like a leading diagonal in this scenario for then more downside, because I'm thinking then about an impulsive structure downside where you have then this as a basically wave 1, so then a 1, 2, and then a big 3 to the downside eventually. This doesn't look too great at the moment as it stands now. So therefore more upside is still a little bit preferred in my opinion. Also because we still have some nice confluences over here that we didn't hit. Of course, the 30k magical level, where I can imagine many people will be buying because they think the moon is next. However, if this then is a wave 5, for the market makers, they can fill their big bags of shorts to then push it to the downside and bait everyone in buying over here. That would be pretty nice. And then also another thing is that we don't really have bearish CVD. So bearish CVD, what it basically means is you want to see price making a lower high, but the CVD, the lines here at the bottom, making a higher high. But as you can see at the moment, both are going down. Price going down, CVD going down, which basically means, and also, of course, if we go to actually the high that we made, you see the same thing. Not only locally, that's the happening at the moment, but also over here with the high. We have a lower high in price, but also lower high on the CVD. And what you actually want to see, bearish CVD is a lower high in price and a higher high in CVD, which means that more people would be buying over here than over here. But clearly price is not higher than the high. So it means someone is absorbing the long positions, the buys. And therefore, that's often a big position. Price can be pushed to the downside. But yeah, we don't see bearish CVD, so I would still like a little bit more upside. But hey, I don't know what's going to happen. No one knows. But it's just, of course, a bias that we have based on our Elliott Wave knowledge. If we then look at this scenario, which is a little bit unique, wave 5 is already in. So in this scenario, we then have over here a 1, 2, 3, 4, 5, which already is the end of wave 5 of 5 basically. So we expect more downside and a corrective structure. So then now we are in a corrective structure, which then is over here a 3 wave, and another 3 wave in a W. Then we have an ABC expanding flat in wave X. Before then, now we are looking for a wave Y to the downside in a 3 wave structure. Now if I open my targets, the only potential support I have before taking these lows is the target box over here between 27.162 and 26.9k. If price would go below this area over here, I think we might just go all the way down to at least the 24,850 target box I have over here, because there's not much support below these lows as well. It's, you know, there's not much structure that we have over here. There's no point of controls or dailies or whatever. So yeah, the next real target box that I have starts right there. So yeah, if we want to see more upside, it's best for price not to take these lows at the moment, but we'll see. Also over here, talking about lows, this low over here supported by this little order block on the 1 hour, which is quite nice. I think if you want to see more upside, best case scenario, not taking this low, but actually still having like over here a higher low, a higher low, a higher low. That of course would be nicest. But hey, again, we'll see, because I do have a scenario where we do go that low. Because in this particular scenario, you see that we have then a 3 wave in W, a 3 wave in X, and now we are inside a wave Y. Wave Y can go down to this 786 over here, which also has this target box with a daily naked point of control, a daily level, the range point of control, basically again between 27.162 and 26.9k for then some sort of a diagonal. The diagonal will be quite stretched though, like if this is a diagonal and then over here we have Y, has to go up of course. Like it will be, you see it starts to look a little bit weird, also because wave 2 is taking so much time compared to this then being a wave 1 in an ending diagonal. And usually actually ending diagonals are 3, 3, 3, 3 type of structures. So basically a 3, 3, 3, 3, and then another 3. This looks a little bit impulsive. So that's what I meant actually at the beginning when we went into the lower time frames, is it starts to look quite complex. So eventually, and that will be next week, we will see what price is going to do, but I still favor a little bit more upside. And the final scenario is again an ending diagonal, but then in this particular scenario, we have wave 2 already finished, and we're now in an A, B, most likely C to the upside, where either wave 4 is already in. You can see price bouncing under 382, which is a legit target for an A, B wave, and then C to the upside. So it's not a wave 4, by the way. What am I doing? It's an A, B, C. So for a wave B, this is perfectly fine. Now the 0.5 is also a target for a wave B if this is an A, B, C. However, I removed it because I don't really like, there's not too much confluence, because if we're going to take this low over here, then I think we can fall to the target box that I have over here, which is basically between 28.55 and then 27.955, because we have a couple of things. We have a daily, we have the golden pocket over here, we have a breaker, we have an order block. So yeah, that could be a nice area of support if price is going to go to the downside, and that is then also the potential trading setup over here, with then the stop loss below this wave 2, because that is the invalidation of this particular scenario, Elliott Wave wise. Of course, guys, it's educational based on Elliott Waves. Please have your own strategy and entry requirements and such. And then we would look for price to move to the upside to, well, the most common target for wave 3 being the 0.786 and the 0.886 trend-based fib extension taken from the low to the high to the low of wave 2. Also a nice confluence with these two over here, the weekly naked point of control and the weekly. So let's see what price is going to do. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I'll see you at the next one. Bye bye.